I don't think that the model that we work with will replace the traditional model. I think they're very different models, and they also cater to very different audiences, I would say, right? So in the traditional prop trading model, you have very experienced traders with a track record. They come to the prop trading firm, they show their track record, and they are given a desk that they have to pay a fee for, like maybe 5,000 a month or something like that. They get access to the markets, there's the whole setup there, their screens, their access to the markets, maybe they have some back office support and, so on. So they just need to come in and do their thing. There's a risk manager usually that's on top of these traders to manage exposures, to manage the risk parameters, making sure that they don't overexpose and they don't lose too much of the money, because they do get access to the real money of the firm, right? Like, it's quite high risk, if you can imagine. You don't just grab someone from the street and here's my money, trade for me, right? So it has to be done in a very managed way. So the audience for this model is quite professional traders. They have a background in trading. They trade various markets. Usually it's like futures, options markets. In our model, there's several differences, right? So first of all, one of the differences is that everything is online. We cater to traders from all over the world. They don't need to physically be present in our office, right? So everything is done online. The second difference is that our traders can be any traders, right? We don't expect and we don't ask for a track record, because our model asks them to get a track record with us, basically. This is kind of the difference, because they sign up, they pay a small fee that anybody can afford. We're not talking about the 5,000 that the traditional prop charges for the desk, right? So they would pay a small fee to take part into an evaluation process. So this is where you would say that they get some track record, right? And if they pass this evaluation process, which has some rules, has some risk parameters that they need to follow. Usually it has like a profit target that they need to reach within a set period of time, or no period of time, just a particular profit target. If they show consistent risk management, mitigation strategies, if they show that they have a good system, they achieve the profit targets, then they go into another phase, which is called a scaling plan or an earning phase. And in this earning phase, whatever profits they make, we have a split with them. Usually they get most of the profit. Now, one of the main difference between the traditional prop trading and our model is that traders do not get access to our capital directly, right? It's usually, most of the times, for us for sure, all of the time, and I'm saying most of the times because I know some prop firms, they say they also give access directly to their capital, but in our case, we always have our traders trading on demo accounts with virtual capital. And this is because of this exact reason that we don't have a track record before they come in. Anybody can come in. Anybody can sign up, right? There's no barrier to entry. The only barrier to entry for them will be that fee that they pay. So if they've heard about prop trading, but they've never traded before, they can come in, right? So as you can imagine, we cannot just give access to our direct live account, because that would be a very huge risk for us, right? So in our case, traders always trade on demo accounts with virtual capital, and when they go to the second phase, the earning phase, we call them signal providers, because in this phase we profile our traders, and whoever we see that they have very big chances of consistently making profits, we copy their trades to our live environment. Right, but that doesn't affect their ability to get a profit split and so on. So there's quite a few differences, between the traditional prop space and our model. Our model is very similar to, I guess, what the brokerage model was initially many years back. I don't even remember, maybe 20 years, I would say. I don't know if my brokerage history is accurate, but maybe let's say 20 years ago, a trader, normal trader, like us, they wouldn't have the ability to trade online on a platform with $500, a deposit. Back then you would have to open an account directly with the stock exchanges, and you'd have to put at least $10,000 in deposit. So it was quite a high barrier to entry. So at that time, the brokerage model came about, and it really is, I don't know if the word is democratized this space for the everyday trader, right? So this is pretty much what's happening with the prop model as well. I feel like it gives the chance to traders who want to become professional traders to get into this space with lower barriers to entry.
Thank you for watching. If you liked that video and you want to watch the full episode, it's available here. Remember to like, subscribe and share. It helps the channel.